Now we will discuss about the deductions in respect of agricultural land, or in simple language, deduction in respect of capital gains on agricultural land. Now I'll not say that it should be long term, because here it is long term capital asset or short term capital asset. In both the cases you will get the exemption under section 54. Now who should be the assessee? It should be either individual or HUF. So this 54B section will give the benefit only to individual or HUF. Suppose there are some companies like Godrej Farming is there, or Patanjali Farming is there. These companies, can they get the exemption of 54B? Na baba, na, they will not be able to get. So only individual HUF can get the benefit of this exemption. Now what they said, that the agricultural land must be transferred. Which agricultural land? If suppose there is a rural agricultural land in India, it is not a capital asset itself. So if rural agricultural land in India is not a capital asset, then there is no point of thinking about exemption under 54B, because it is not a capital asset, it is not taxable under capital gain. So when it is not taxable, will we think about exemption? Not at all, right? So rural agricultural land exclude. Urban agricultural land, for that this 54B exemption is given. Okay, but the point is, urban agricultural land should be used by the assessee or their parents for at least 2 years. Now these 2 years they use it as being a part of HUF plus as an individual, or as a tenant plus as an owner. Everything is okay yaar, but did you use the land for agricultural purpose for at least 2 years? If the answer is yes, then we have to say that it is, you can claim the exemption under section 54. Now if you see this 2 years rule, you may get confused. Sir, they said short term bhi chalega, long term bhi chalega, right? And compulsorily 2 years it should be used. How, sir? Actually, in many years back, to decide whether the asset is long term or short term, 3 years was the criteria. So more than 3 years the asset is held, it's long term. Less than 3 years it is held, it is short term. And in that context, using the asset for at least 2 years, there is a possibility that you may get short term capital gain, or even long term if you hold for more than a particular period. But in today's context, the land will be treated as long term if it is held for 2 years or more, treated as short term if held for less than 2 years. So in today's context, there is no scope for short term here, but the laws are not amended. These are very minute things, so we'll just ignore for the time being. But exam wise, if you have to write, what will you write? Hey, section 54B talks about deductions in respect of capital gains in relation to agricultural land. 54B applicable to individual HUF. The land must be used for agricultural purpose for at least 2 years. Whether you did it as a HUF, then partition, then you used for personal agricultural purpose, or as a tenant you used and then purchased and then sold, and you used it for at least 2 years as a tenant and owner together, all is okay. Remember that rural agricultural land is not capital asset, so not think about capital gains on it. But only for agricultural land which is in urban area, this section 54B exemption applies. Now when you buy the new agricultural land, that new agricultural land may be purchased in rural area or urban area, doesn't matter. The new agricultural land you purchase in urban area or rural area, doesn't matter. Anything is okay. Okay? Clear? Right. What is the deduction you are going to get? The deduction you will get either the capital gains which you have to get or the amount invested in new asset. The capital gains or amount invested in new asset, whichever is lower, you will get the exemption. Right? So when you should buy the new asset? Within 2 years. When you should buy new asset? Within 2 years from the date of sale of agricultural land. Only one criteria. If you buy within 2 years, that's enough. If you successfully do so, you buy within 2 years, then you will get this exemption. What is the exemption? Either the capital gain or amount invested in new asset, whichever is lower. But then there is a cap again here, that you should keep the asset for at least 3 years. New asset you should keep for at least 3 years. We use the word lock-in period for this. If you sell the new asset within 3 years, then what will happen? Within 3 years from the purchase of new asset, if you sell the new asset within that 3 years period, then when you calculate the capital gain on the new asset, when you calculate the capital gain on new asset, you have to deduct cost, right? But that cost will be reduced by the exemption what we got earlier, right, under 54B, and then balance cost only will be allowed as deduction to decide the capital gain. Okay? If suppose you deposited the money into capital gain account scheme before the due date of filing returns, and up to 2 years you did not use the money, neither purchased a new agricultural land, then deposited money in the capital gain account scheme will be taxable. Unutilized amount will be taxable. Now whether it is long term or short term, it all depends upon what was original asset. If original asset is long term, then this withdrawal from the capital gain account scheme will also be long term. Okay. Suppose government compulsorily acquired your long term your capital asset or agricultural asset, right, in the urban area, then in that case the amount what you get from the government, the capital gain what you can calculate on it, will be fully exempt under section 10 subsection 37. What I said, hey, you have an agricultural land in urban area, government wanted to build some project, so they acquired your land, they paid you some consideration. Is it taxable? The answer is no, because there is a capital asset, but that is agricultural land. It is transferred to government, that is also okay. But under section 10 subsection 37, it is explicitly exempt, and that's why we call it as exempt. There should be no ambiguity or doubt in this topic. Clear to all of you? Yes or no? Any doubts are there, you can always contact me. Okay. Now with this, I feel we'll wind up this lecture, and in the next lecture we'll discuss section 54D, 54E, 54EE, 54F, all that things we'll be discussing. One thing I'll tell you, section 54 related matter, that if government compulsorily acquired the residential house, I am talking about not 54B, I am talking about 54 only. Government compulsorily acquired your residential house, so that within next 2 years you should purchase, within next 3 years you should construct. That rule will apply from the day when you get the money from government, from the day when you get the consideration from the government. This is applicable for 54 section. But what about 54B? Just I said that if government compulsorily acquires, it is fully exempt under section 10 subsection 37. This is for 54B. With this we'll put an end. Bye bye everybody, take care.